All right, let's take a look at the Canadian dollar. Today I'm going to go over my higher time frame, more investment style trading approach. It's a multi-time frame analysis approach. It's based on some concepts taught by Inner Circle Trader, and I learned some other things from some other YouTubers that has evolved into a nice trading strategy here. So for my high time frame, I have the 12-month, intermediate time frame 2 week, and entry time frame 12 hours. So for CAD, my bias for the year has been for the Canadian dollar to trade up into the 2023 highs. My reason for that is last year we put in a swing low. So what I mean by swing low is when this candle closed with the low higher than last year's, and then 2022's low is lower than 2021's low, we've created a swing point in the marketplace. So the idea is the momentum is to the upside. So that gives me my directional bias. The next step is for me to watch my intermediate time frame and determine what is the order flow, what is the order flow, bullish or bearish, and I determine that using I use change in state of delivery as one of the main ways to tell if a market is delivering in a bullish or bearish state. So to summarize, and basically the market's delivering in a bearish state when the lows of up close candles are getting closed below, and I'll show you what I mean by that. Here we see the lows of up close candles getting closed beyond. That's a bearish delivery state. Now, if I'm looking for longs, I want the market to be in a bullish delivery state, or the only entry I'll take if the market is delivering in a bearish state is if it trades below a swing low and I get an entry on my entry time frame. So right now we're delivering bullishly. So what do I mean by that? Well, this down close candle here we see got closed above. So in a bearish market, that won't happen. In a bullish market, the highs of down close candles will be closed beyond. So that's check mark number one. So we're delivering in the direction of the drawn liquidity, which I've marked up here. So this 2-week candle just closed, and what now we have is some points of interest to look for entries on the 12-hour time frame. So what I marked out here is we've created this gap, which I've marked with a gray rectangle. So I've got an alert set for when price trades down into it. I know that price is in a range where I would look to take a long using the 12-hour chart. With this strategy, I'm okay with taking entries using a change in state of delivery. I found that the change in state of delivery entry works pretty good with this. For other strategies like my commitment to traders approach, the change in state of delivery is a bit too risky. But in this case, I've got a clearly defined direction. The intermediate time frame gets in alignment with that direction. And then when price pulls back into a point of interest where if I'm bullish, any bullish price action being a bullish change in state of delivery on the entry time frame should basically be a safe entry. So basically what I'd be looking for is for price. So I've marked off this gap, and then I've also marked off this 2-week order block. So this is the down close candle that led to this change in state of delivery and the creation of this gap. So basically CAD can trade down anywhere into here. The most bullish scenario is it trades down somewhere into the middle of this gap and it doesn't go much further before it gives me my entry. So my entry will be a bullish change in the state of delivery. So what that would mean is on my entry time frame, I need to see the high of a down close candle closed beyond to the upside once we're in one of these zones. So basically what that would mean is, let's say price goes like this week, and then now we trade down into here, and then let's say this is the high of a down close candle, then I get a close up there. Well, that would be my entry. So there's a handful of these markets that are set up right now. well, I shouldn't say set up. There's draws on liquidity that are being traded towards, and this actually is nicely confluent with the committed traders approach. I've seen signs that we should see some sort of pullback in some of these major currencies like the CAD, the pound, the euro, the yen, the Aussie, the Swiss franc. All of those currencies have setups for shorts if we get a confirmed trend change to the downside. So this is what I'm watching on CAD this week. And then basically if I get in, the target is this high. So it's quite a large trade. This same idea already played out on the pound. There's been a number of other charts that I've watched this year that have played out quite nicely. So this is what I'm looking for on my higher time frame, multi-time frame analysis approach for the CAD. If you have any questions about how I trade this multi-time frame approach, or if you'd like to learn more about the premium discount arrays and how I marked out all these levels, I'd recommend you go to the Inner Circle Trader YouTube, and that's a very intimidating place to go because there's thousands of hours worth of content on there. But just basically search PD arrays, premium discount arrays, and you'll learn about all these different levels on the chart to watch. I only pay attention to the ones that are relevant to me at the time and that are in favor of the direction I'm looking to trade. Otherwise, I just ignore all the other ones. So hope this is helpful. Hope you guys have had a good weekend and that you get a great week coming up, and good luck and good trading.